Hi there, and welcome to another episode of Business Insights with Mr. Kerridge. I'm delighted today to say we welcomed Sama from the Qatar Stock Exchange. Sama has got lots of experience of working with public limited companies, and he's agreed to give up some of his time to share his knowledge around public limited companies with our students at DBS. So we're very grateful for that. Thank you for giving up your time.
You're welcome.
This is a starting point for our students. Could you just provide a little bit of background in terms of your work experience and your role at the Qatar Stock Exchange?
Yeah, I am in charge of financial education in Qatar Stock Exchange. I've been working with Qatar Stock Exchange since the last 17 years. Previously, I worked with the Egyptian Stock Exchange. I'm graduated from the Accounting and Finance Department in Cairo University in Egypt, and I hold Masters in Finance from the University of Strathclyde in the UK.
Thank you for that. Shifting to the focus of today's Business Insight on public limited companies, could you just provide a little bit of an explanation around what's the difference between a public limited company and a private limited company? What are some of the key features that differentiate the two?
Yeah, I mean, the public company is usually a company that is open for the public from its name. I mean, any investor can have shares in this company. Usually, here in Qatar, public companies can be defined with three main features. First is its capital. Its minimum capital is 40 million Qatar riyals. Then the second thing is the number of shareholders, minimum 100 shareholders. So the shareholders of public company should be 100 or more. And third thing is the free float. Free float means that part of its shares are open for public, are not owned by the government or are not owned by strategic investors. They are open for and available for trading in the stock market. And this percentage here in Qatar is 20%. But private company is a company usually owned by a small number of investors. They are usually family members or friends or so on and so forth.
Thank you for that insight. I really appreciate that. I know the students will benefit from it. Just moving on a little bit in terms of public limited companies, what are some of the key drivers why a business would want to convert from being a private limited company into a public limited company? Is it some key advantages to doing that?
Yeah, I believe that the main driver or the key driver for a company to be transformed from a private to public is to raise money. You know, private companies can raise money mainly from the owners or from banks. But when you raise money from the bank, it becomes a debt or a liability on the company. And any company in the world, they have only a certain capacity or a certain limit to bear debts. They cannot exceed. But usually companies, when they want to grow their business or to have expansion, whether locally or internationally, they can go public by raising money in the capital market from investors. From any investor in the country, and this money will be added to the capital of the company in order to be able to grow in the future or to have those expansions planned by the company. So I believe this is the most important thing. The main advantage here is that the company now has access to the capital market. So at any certain point of time, they want to grow more and they want to raise funds to finance this growth. Now they are able to do so through the stock being listed on the stock exchange.
Thank you for that. Just on the flip side, what are some of the difficulties in terms of being a public limited company? Have you got more scrutiny? Is there more regulation? Is there more administration?
Yes, of course. Of course, there are advantages, but of course there is some cost for these advantages for public companies because they have what we call it ongoing obligations towards their shareholders, towards the regulator, towards the stock exchange. For example, they have to disclose their financial statements 4 times a year, each quarter, and of course, at the end of the year, which is we call it the annual financial statements. They have to be very careful when it comes to trading their own shares by board members or by any insider, any employee in this company, because maybe they possess some information that is not available for public. And then the company can be sued by any ordinary investor that they have information and they got used of this information before, and so on. So, of course, there are so many ongoing obligations. Also, the transformation process, which we call it IPO, it's not cheap, it's expensive, because the company has to prepare some feasibility studies, and they have to appoint an auditor, they have to appoint a financial advisor, they have to appoint an investment bank in order to manage the IPO. So yes, it is beneficial, it has so many advantages, but at the end of the day also it has some cost.
Thank you for that balanced view there. That'll be really insightful for the students, so thank you for that input. Just taking on a step, you mentioned IPO. How does that work in practice, and what does an IPO mean for the students?
Okay, IPO means initial public offering. So when the company wants to transform from private to public, they do an initial public offering, which means that they prepare a feasibility study or a business plan. They get this business plan approved by the regulator. In Qatar, the regulator is the Qatar Financial Markets Authority, which is a governmental authority. When they have this approval on the plan, then they can do an advertisement in the newspapers asking people to invest in their companies and buy their shares. This advertisement is called the prospectus. Then during the period of subscription, this period usually takes 2 weeks here in Qatar, people can go to the appointed banks, investment banks that were appointed by the company to collect the money. People can go and invest their money or deposit their money with the bank and get a receipt. After the end of these 2 weeks, the company make what we call it allotment of the shares. So they allocate the shares to the buyers. And then the company can be listed on the stock exchange to be available for anyone who wants to sell, from those shareholders who bought the shares during the IPO, or anyone who wants to buy in the stock exchange.
Thank you for that, Sama. And just taking on a step, you mentioned there once it's listed on the stock exchange and people buying and selling the shares, how does that work in practice at a simple level for the students? How does the stock market actually work and operate?
Yeah, once the company is listed on the stock exchange, then its shares become available for trading on the stock exchange. So the stock exchange opens the trading every day from 9 a.m. until 1:15 p.m. During this period, any investor can go into the trading system of the stock exchange and ask to buy any number of shares according to their savings or according to their available money. And also anyone who holds shares, is a shareholder in a company, they can go and offer their shares on the trading system to sell those shares to the willing people to buy, or the buyers.
What determines that price in terms of the buyer and seller? What are some of the factors? Is it the profitability of the company? Is it the dividends that the company is going to pay? And external, is it the economy, for example, determining that supply and demand?
Very good question. Very good question. All these factors, by the way, are affecting the price, of course. But at the beginning, we say what? That this interaction between buyers and sellers, which we call it the interaction between the demand and supply in the market, determines the price. But of course, what determines the demand or what determines the supply? These factors that you mentioned. So if the company is profitable, you will find more people willing to buy. So the demand will increase. In this case, this will increase the price. If the company is making losses, then vice versa. The supply will increase. No one wants to buy. And maybe the current shareholders want to sell and find another or a better investing opportunity. Then the supply will increase and the price will go down. Also, the economy. I mean, if, for example, in Qatar, our economy is mainly depending on oil and gas. So if the oil price in the world decreases, then people will have an expectation that this might negatively impact the economy. And this will, if the economy is affected, then the companies working in this economy, of course, they will be negatively affected. So people will start to sell their shares to avoid any losses in the future. So the supply in this case will increase and the prices go down, and vice versa.
Thank you for that. So the shareholders that have invested in these companies are obviously wanting a return, they're wanting dividends, they're wanting the share price to go up. Do these public limited companies have to pay dividends? Can they choose not to pay a dividend? And what's the implications of that decision?
Yeah, the companies, by law, they don't have to pay dividends. They don't have to pay dividends. But usually companies, they want to make their shareholders happy. Here in Qatar, shareholders or investors will be happy if the companies pay them dividends. So that's why you will find here in our market, most of the companies are very generous in paying dividends. But this case is not valid, for example, in other countries. In the United States, for example, if company pays high dividends, this will be defined by the investors as the company doesn't have future plans to grow. So in this case, people will not favor this company, then the supply will increase over demand and the prices go down. You know, I'll give you one example. In the US, for example, the most expensive share in the whole world is for a company owned by Warren Buffett. Of course, you know Warren Buffett is the icon of investors in the world. This company in the US, they never paid dividends. You know what is the price, the market price of this company? Almost $330,000 US. So because companies, when they don't pay dividends, if they are profitable, by the way, because maybe some companies, they don't pay dividends because they make losses, which means that they are bad companies, of course. But if the company is profitable and not paying dividends, this means what? This means that they are investing these dividends in future growth. And this future growth will be reflected on the share price in the future by increasing the price.
Thank you for that. That's a really interesting point, because typically if you pick a textbook up, the students will see something like short-term pressure being put on by shareholders on the directors.
Yeah, honestly speaking, we always, or I personally always recommend people not to, when they invest in the stock market, they don't look at the short term at all. They should always look at the long term. Most of the markets around the world, statistically speaking, and this is an empirical evidence, that on the long term, which means 5 years or more, most of the markets are doing very well. And the indexes, price indexes increases. But the problem with the short term is that people may panic when they find the shares are going down, and they go and sell the shares without any reason, just for panic. Or they, by greed, when they look at a certain stock and find that it's going up, the price is going up, they go and run and buy, and without also any fundamental reason. And they buy at a very high price, and then the price goes down again, and they make losses. So short term is not good. In my opinion, or I recommend always to buy a stock, I need to look at it fundamentally. I need to make sure that this company is a good company, have a promising future, because when we invest, we don't invest in the current future, in the current situation. We invest in the future, because I want this money to pay off in the future, not now. So I need to make sure that the company has good fundamentals, has a promising future in the business, and I keep the shares for the long term. Then I would expect that this will pay off. Otherwise, to work as a speculator on the short term, you need to be very skillful with the technical analysis, and you need to be very focused and have the time to look at the market movements every second.
Thank you for that. It's really insightful in terms of looking at the short versus long term, but you obviously talking about looking over the longer term and the payoff from that. We're speaking when there's a health crisis around the world and an economic crisis. I just thought it'd be a nice one to finish on in terms of your view economic impact of the coronavirus and how that's impacting markets and your thoughts around that.
See, of course, the coronavirus was something that was out of all expectations. No one expected this situation before, or even no one thought about it or dreamt about it. So just now, as you see, the lockdown in most of the countries around the world, of course, it will affect the business. It will affect all companies. Of course, in different magnitude. Some companies will be affected by very, very big time, and some companies will be affected minimally, especially companies who are working in food and beverage services are not very much affected like companies working in the entertainment, like cinemas, for example, or theaters, and so on and so forth. But the effect, yes, of course, everyone is negatively affected. And this will spill over the economy everywhere. So markets now, as you can see, I mean, everywhere, I can say they are crazy. One day you find them 5% up, the next day or the following day you find them same 5% down. So it's out of expectation, but of course, most of the companies will be negatively affected in the future due to the coronavirus, especially if the case or this situation will last for a longer period.
Thank you for that. It's really interesting insight in terms of the current situation we're in now, the economic impact of that, and how that's affecting markets. So thank you for that. I really appreciate you giving your time. You've talked us through in terms of what is a public limited company, what's an IPO, what does that process look like, is it expensive? And then you've mentioned some of the drivers around becoming a public limited company, some of the drawbacks associated with that, or some of the costs or considerations, and businesses have to weigh that up. And we've talked about how the stock market works, how share prices are determined. So I really, really appreciate you giving your time and providing that input. And just one last question I thought we could finish on. If you were stood in front of my business class and you could speak to them, what advice would you give?
I believe the one advice that I give them, that they need to start investing early. Now, when you are younger, you don't have the very high financial responsibilities when you become older. So now you have more savings, more money that you can save. I believe, the children, they are fond of PlayStation and so, but they can save or keep some money and invest this money for the future. This will pay off in the future, and they will be very happy after 10 years when they find that, for example, the 1,000 or 2,000 US dollars or the Qatar riyals that they saved and invested, they become maybe, inshallah, 10 times or more even in 10 years' time. But before investment, I have to choose very well by doing my homework and studying the fundamentals of the company.
Okay, thank you for that. And again, I really appreciate you giving up your time. I know you're busy, so I'm sure the students are going to really benefit from your insights you've given today. Because it's a very complex area. It's not a simple area for students to get their head around when they're studying business. So I really appreciate the input from somebody out there working and involved in stock market. So thank you for giving up your time.
You're most welcome. And of course, I will be very happy when this situation is over to host you in you and your students in the stock exchange to show them the stock exchange in practice.
Thank you for that. We look forward to joining you and experiencing that. So thank you again.
Thank you. Thank you so much.